Hello, my friends. I'm Rocky Outcrop. I do professional level technical analysis daily for Tezos and Chainlink, and as well, actually, Ethereum and Bitcoin. But I split it across two videos. And I really want to say thank you so much for joining me. Now, what we've seen in the last 24 hours of price action with regards to Chainlink and Tezos is movements which line up with what we've already been talking about in terms of the TA, which makes today's episodes really easy to follow along with if you're a subscriber. And if you're not a subscriber, then hit subscribe. And if you'd like to help the channel grow, then that would be fantastic, because I'd really appreciate people who would hit the like button and leave a comment down below. Let's just dive straight on into the charts and see what we have on the go at the minute. Thank you for joining me. This is Chainlink versus the US dollar on the 15-minute. You can see that we're coming in here with the potential for a touch of hidden bullish divergence, potentially here with regards to these lows. But let's also be honest, because we can see at the top there's definitely bullish or bearish divergence as well there with that recent top. And we're challenging this 50% Fibonacci retracement line in there at $13.71. Of course, zooming back out the way, going up towards a bigger time frame and looking at this with a little bit of a broader perspective, you can see that clearly that puts us right in here with having tested off of the areas that we were speaking about in the previous episodes. And we did, previous to, on the 18th and that, we came up towards the top end of the parallel channel, dropped back down the way. We did find support then ultimately in here at that 1270 area and moved towards the top side, 1370, the next target up the way. And of course, if we do continue to move up the way, we're looking towards 1440. And that is all that we were talking about in yesterday's episodes as well. Look at those numbers. Do you see how that lines up from the episodes recently? So that's perfect, right? So, liking and subscribing for this valuable content, I do believe. Okay, yeah, cool, nice one. Anyway, we're still in a bearishly divergent stance. I'm looking towards that as the current pivot point. If we move down the way, these are targets we've had in the mind for the last wee while. Simply put, as well, it's worth bearing in mind that the median line is coming in now about $13. So, maybe that's worth having in the middle of those two there, just as a sort of pointer for talking about. But anyway, that's where we are currently. As you can see, we have this dance of musical chair joys on the 4-hour time frame. What we're seeing is that the volatility is super low because we've actually pushed back up. The result of this movement down the way, having come up towards the 1430, back down towards 1270, then back up again, is that we're actually seeing the strength of trend having dropped off lows. And this is talking about volatility here when I shade in the background of the DMI. I'd be keeping my eyes peeled for that, of course, and whenever this music stops here, then the party will certainly begin. Is that showing up on other time frames? It was on the 1 hour. Looking back the way, it stopped here, we got a movement. So there's something if you're going to do chart staring at competitions, having a staring competition with a chart, that's something that you can do. I tend not to do that, but it is worth checking out and reminding people about these things when we're looking at them. Is there anything on the higher ones? No, there isn't. Cool. That's going to do for the dollar pair. And I have to say, we have covered everything in the previous episodes. If you're thinking to yourself, this is somewhat lacking, I invite you wholeheartedly to go back and check out the previous episodes, because you're going to get all of your information there. So let's briefly just look through at the Ethereum one then as well, and we'll go to Bitcoin in a second. You can see we're coming in here. This is going to be bearishly divergent unless we push up past this zone. Need to see 29 being taken out, and let's call it 2882 again, that number that keeps following us around on our technical analysis videos. If we can push past that, then good. Otherwise, then we're looking down the way again thereafter. But things are looking pretty decent in terms of this one at the minute for the potential for a movement up the way. If we do retrace back down between these moves, then I don't want it to go any more than a sort of 50% effort for the cup with handle. In fact, I'll take it more or less from the base in here, going by closes, and just talk about it in a more general terms here from the sort of, and I'm not doing, this is by no means a textbook. We just wanted to give you the ideas that we're looking down the way 28 0.028 and then below 82, then we're below that 236 there, so 0.0287 down the way, then perhaps we're looking at 28109, 27729. If we then continue down the way, then that's downward price action. These would be the retrace points that I'd be looking at in around this zone myself in terms of this particular timeline. line. Just in general, you know, because as well I would do analysis based off of these actual highs and lows that we've looked at if I were to be doing this with, you know, with a view to trading it myself, which is what you should be doing because I teach you how to do that in every single episode. I'll just point out that there is this bearish divergence heavily there on the DMI as we're at a pivot. So let's just see how that pans out. Here we are in the BTC pairing. I mean, what do you want me to say? We talked about this in detail in the previous episodes as well with this extension down the way. This is where we're seeing the price action coming in at. Need to take this thing out. If you want to draw it in yourself, then I don't know, but you can look at a couple of different numbers. It's not like I put, if you're a subscriber here, you already know I don't put too much emphasis on these things in terms of requiring accuracy from people. But look in here, you can see that the wicks are coming in here and touching this. So what we need to do is move above that 77k area. Really need to move up to the 80s. Really do, to get, you know, and challenge this zone that we have in here. Otherwise, we ain't doing nothing, yo. So, but that's, you know, this is where we are. This is what we've been talking about. So you can check out that in more detail from yesterday's episode as well. Things to be bearing in mind. No hidden bearish divergence. Well, actually there is. I mean, this here, no, it's not. Not really. No, I'm not going to call it that. But no bullish divergence either. Oh, there is. Is there? Yeah, there is. Cool. So we have a little bit of something. So between these 2 points here, there's a bit of that divergence. Cool. Nice one. Excellent. Let's take a look at Tezos. So thanks so much as well for joining me to look at Tezos. If you're just, you know, skipping the link part, I recommend you watch it. And if you're also just after watching the link part, I recommend you stay tuned for the Tezos part. I really do appreciate people who leave the like button, hit the like button, leave a comment. It helps the channel grow an awful lot. Let's rejig all of our jiggery pokery around here. This has been put back a few days. You'll see me complaining in the Bitcoin video about how my drawings disappeared. So I've gone back a few days. Don't know why. Looking here towards the 236 at 1383. If you want to see upward price movement in terms of the broader picture. Now, what we can say then as well is that there's missing a sort of Fibonacci. Let's just draw one in real quick here and take a look at a couple of key points. The 236 comes in there at 0.001206. What we're talking about there is 12,000 Satoshis. We know that that's going to be a key pivot area for us. We can see that very much the case when we look towards this last low over there. And then if we look at this low where we just put in and then mark that off, that's where that is. That's where that is. In between times as well, we had that one. But we don't need to be paying too much attention to that in there because it was really just interim. And what we can see then as well, if we look past this interim one back to where the previous one was, we've come in lower than it. We've also come in, you know, slightly higher than our previous low here, and it's the interim one. So in the broader perspective, yes, you know, this is convergent. This was ever so slightly lower than the previous low there. But from this interim term point of view, not so much. So let's do a comparison between different time frames. 4-hour time frame, bullish divergence, and then not. So you're looking between this area then. So we do really need to be paying attention towards this particular sort of fib movement that I've got drawn in here, which does come in there at that 12 area. So 12,000. 12,800, 13,250 are the three sort of zones. If we move above that, then we can start to look back on and latching onto this bigger Fibonacci retracement yet again. This could potentially be a bear flag. It does have the shape of one. Worth bearing in mind. So that, of course, is all at the mercy of the Bitcoin pricing. So instead, let's take a look at where we know we can get down to brass tacks. And this is the dollar pricing. We did our measured move off of this thing, and now we've moved back up again. We tied into certain areas of it. Overall, we're finding that we're being sort of resisted by this continuation of the movement of the prior zone continuing on down the way here. So let's just see if we can push past above these areas. And that's coming in there at 213. That's no surprise to anybody who's been watching along with all the different Fibonacci extensions and stuff that we've talked about in the recent past with regards to that area there at 211, 213, stuff like that. I've probably got some floating around here that I could point out potentially. Where are any of them? Doesn't matter. Don't care, really. Don't need to show you that. You'll remember from having subscribed. That's an important pivot point in the market. But what we really need to see happening here is for us to be taking out our previous highs, pushing up past that area and going towards the top side. And you know, that's the movement between this range here. So far, we're in that sort of mid zone of it. what we want to see is that we can push past all that. So we know that we're above the 236. Clearly, that's in there at 194 area. And we have the 50% then lining up with that 212 area that we're just finding as resistance right now. And we weren't able to push past the golden pocket zone previously. So, that kind of lays out where we need to see in terms of movements towards the top side. Downside movements, well, we're just talking about revisiting previous areas such as 197 down there towards 178 as being your lower low if you're going to look towards one to try and find support. Well, let's actually call it, 175 at this stage. But let's remain somewhat positive in this time being, because we have the opportunity to do so at the time being, given the overall positivity in the market and the clear inflection points that we have around us, for instance, at 239 and 263, taking out those areas, being below this at the minute, you could say let's remain bullish or bearish on this until such times as we've taken these out. This is kind of what I'm saying. Either way you want to, whatever the semantics is that you want to use, I don't really care. Moving past this zone and this zone, very, very good. Until such times, not so great. We have the opportunity to do so. Let's try and see if we can. If not, then I'm managing my risk based around these sort of key targets that we've taken out already just to get to where we are now, including as well the 1212 area. And which, seeing movements up past these areas in terms of percentage movements is very, very, very good. Up to the 339 or 239 areas, an 11% move, and that of course would translate very well with the Bitcoin pairings, because each one of these stages up the way takes you a significant number of percent. For instance, moving between the median line here and up towards the next line, and that sort of thing is like a 20% movement. So if we can do a movement from here to there, you're talking 20% chunks along the way. So that's good. What about the Ethereum pairing then with this one? How did that go? This trade? Yeah, this trade didn't work out. We talked about it not working out already. So we have to revisit that with the whole charts not being updated thing. If we're looking at it around about this zone, what are we talking here? 4 hours. Was that in yesterday's video? Yeah, it was, wasn't it? This low was yesterday's low. Yeah, cool. So yeah, staying above that area is going to have to be key for us, staying above that white area. If you wanted to trade off the back of it, easy, simple trades to be made looking towards the top side. Yes, this is not good, this downward movement. Yes, it's kind of just like kind of settles what this wedge has been doing, it's just like, well, whatever, it's moved sideways rather than up the way. We want to see this moving up the way, obviously, to sort of get any sort of reaction here off of this thing. We're finding that we've got this bullishly divergent low coming in at the bottom, and the potential for a movement up at this key area. If not, then death becomes us at that point, looking down towards perhaps 29, or indeed maybe that number 2882. I'd say let's just stick it in there at 2882, because you just know it, don't you? Well, this is kind of like that, doing it for a laugh. Before, it was always based on technical analysis, but I'm going to stick a 2882 number in here just for the crack to sum up and finish off. It's too hard, it's too difficult. Stick it there instead. And you can see it lines up. Right, okay, cool, nice one. That's going to do for today's episode. Thanks so much for tuning in, really do appreciate it. Kept things nice and short and brief and simple and easy and all that to follow along with, because we had the benefit of doing so from yesterday's episode, telling us everything we need to know anyway. I do, obviously my heart bleeds for people who experience pullback, and then got on the wrong side of moves around these things. Just bear in mind simple stuff at the minute that we've been talking about, 2 for top side, 195 lower side, 211, 212 key inflection points. If you're trading in around those areas, then you're probably doing all right, I would say so anyhow. And that is cool schmool E. Thanks so much for tuning in. There is what I was just about to say bye. There is sort of class B hidden bearish divergence, by the way, in around that area. If you want to be aware of it, you've got sort of class A hidden bearish divergence in the stochastics, but we have upward pointing ones, and things are looking at the minute with it that it's going to see if it can attempt to go up and fail, as opposed to trying to go down and looking for failure that way. And that's kind of what we're looking at. Hope that helps. See you next time. Oh, likes, comments, do that. If you've watched through to now and you haven't left a comment, go ahead, just type in any old jazz. It'll be good to see it. Thanks so much. See you next time. Oh no, not any old jazz, something relevant to crypto market, obviously, but we can chat. See you.